So here's a quick little stock talk, movements in the equity market that I foresee going forward, and positioning that I'm looking out for going forward, right? So as I discussed last week, there's the potential for that decline to happen into March 9th Vantage arm flows that would lead us into kind of a less of an opportunity for the downside on SPY, on the indexes specifically, due to the dispersion that can happen and the pinning of the indexes when these Vantage arm flows come into play, and when they are unwinded, when the hedges and positions unwind, that offers the opportunity for the downside moves to be exacerbated. And in a big expiration like March, which is going to be in our quarterly expiration, things are going to be very pivotal as well. So the top could be in, right? That is what I want to say, is it could be in, it could not be in. I don't really care if it is or it isn't, right? I want to say that there's an opportunity to short this here. There's an opportunity to short this here, leading into this kind of gap fill from the third, and then leading into this kind of peak fearful environment, right? When you have that kind of war news and the oil kind of price action as well that I'll discuss, you have a lot of people to get very fearful in indexes and in risk on equities. And in the short term, that's just not a good opportunity, right? So when we see this happen, you want to be cautious and understanding of the window that we're in and the window that we're approaching, right? So we see the potential for the last point of supply to be put in, a breakdown into a loss of our path of least resistance that was established to the full fill. Well, that happened this week, but this is an opportunity to short the March 2nd in long that give you a discounted lower high. We get a really nice notable buyer off of 671, a potential secondary lower high put in, and then the breakdown again to retest this gap low from December 17th, and then the subsequent new week opening gap down on the 9th. Now, this is when we had that peak fear environment, right? So when this happens, we're going to see a lot of people that get long energy, short indexes late off of this news trapped. And when it approaches a window like this, the risk reward to get aggressive short side is just not there. So there's an opportunity to short it on the 2nd. There's an opportunity to short it on the 4th. And there was an opportunity to long this and even short the gap fill. I would be a little bit more cautious about taking short exposure aggressively in terms of targeting a new low, right? Now, this gap did get tapped, right? I don't think that this is, too far-fetched if we could see a full fill happen. But with the window we're approaching, I'd be a little bit more speculative, right? We have a big-time buyer off of the quote-unquote war is complete news. I'll talk about that in a second, how these kind of, tidbits and conferences are all playing into the movement of oil and crude in order to kind of stabilize the price action. And a lot of people got trapped, and it really exacerbated the move downwards, right? So that's kind of how this developed. And as far as going forward, there was a short to take right here. I think you could target 671/672, which would be the weekly closure, as far as like a potential for like an internal higher low. I wouldn't long this, and I really wouldn't short this aggressively on like leveraged exposure. I think this could stay pretty stagnant within this range. I think this could decline further. I do think that the cleanest short opportunity is going to come post-May OPEX and post-quarterly expiration as far as indexes go. Right now, I did take an NVDA position via NVD. Right, a couple of reasons why. We have a distribution up here. Right, we have our preliminary supply, our climax off the earnings report, our UT and our UTAD being put in October of last year. We have a lower high in these gaps happening off the report, and then an attempt to redistribute this on a smaller time frame, right, where we have kind of our preliminary supply, our climax, our reaction, our UT to some extent, and then like our UTAD that happened off the report. And all of this kind of aligns with the path of these resistance through this 170.89 range, right? And all I'm playing here is this discounted lower high that's being put in within the earnings candle, right? And when you look at the after hours price action on here, right? This is why I say this could be our UTAD, right? Because we have a big spike off the report that taps this 203 range, immediately loses all the progress, opens red, and then an 11% decline following the highs of the day of the earnings report in regular trading hours. These are big time gaps, but we don't need to necessarily fill them if that kind of campaign is established and a lot of those hands change off of the report. And even tapping it in after hours and potentially spark a big kind of counterparty liquidity. Can spark, and on the earnings candle can spark that counterparty liquidity that offers those fills for those sellers, and we can have a distribution that's kind of put in here with like I said, our preliminary supply, our climax, our reaction, our UT, and our UTAD, and this could be our kind of lower high. I'm buying NVD because, first of all, it's 2x leverage, and second of all, look at the volume coming in here, right? We have the highest volume of all time, which doesn't say much on these leveraged ETFs, but we have like a really clean structure being put in here, right? A really clean structure that, if you look at how this is developing, you could easily take this to 22 or 20 to 22% to like $8. So I really do like how this is developing. I do think that the 0.5 at 188 is probably going to be where I take the remainder of my position when you look at how the after hours price action structure looks. But this is very notable, right? We have, a bidder here, a bidder off of those lows, exhaustion, a nice pop, and a higher low. This could give you a nice spike to 835. I wouldn't try to play this entire accumulation. Same with NVDS. We have a very, very similar structure going on here as NVDS. Here's like our sell climax here, right? Our reaction. Take out these lows multiple times. And we're developing a potentially clean structure here that could take this 21% on NVDS, right? Like that wouldn't surprise me at all. On NVDS, if this went pretty nicely, I think it all kind of makes a lot of sense when you look at NVIDIA, when you look at SMH, right? This is trading into its lower high range off of the bidder from Monday's session. This could continue to decline. If you look at TSM as well, potentially drawing into these gaps in lower high territory, and it could, if you look at MU, I like how the MU looks in the report, and it could take a little bit until VIX expiration and OPEX next week. But this is kind of my preferred vehicle short side going forward. I think I can easily take this from like 187 to 188 down to 171, which would be an 18% return. Potentially down to 164 would be a 24% return. And then look to roll it again to 153. LOY is a good one. This is a big time accumulation that happened off of an all-time high stall and seller at the 966 spot. We have the notable cumulative behavior that happens off of here. Just a really clean structure that is put in, right? We rally to new highs easily. We fail those highs, and we really develop this reaccumulation, right? Where we have this consolidative, is that the right word? Consolidatory price action. It was like a path of least resistance through 1200 or 1100 being established. Really healthy behavior, reclaiming the previous all-time highs, internal accumulations, taking out these lows. Very minimal effort in follow-through from these sellers, more or less a passive bidder. So that's something I'm watching going forward, nothing yet. And then USO, right? So I talked about kind of the overall outline of USO and how important it is and how clean the long opportunities were on this name and on energy, particularly going into this year. And even the Venezuela news kind of being a spark for that rally, right? Now, you look at this chart, you look at the COVID behavior, the 2021 to 2022 rally, and then the subsequent consolidation for the past 4 years, and the healthy behavior internally, there's an opportunity along this, right? And that opportunity comes after the April lows, spark the June rally, and then we kind of get this reaccumulation internally that offers like a clean opportunity to long energy and oil, right? And then we see this kind of spike off of the Venezuela news, which I feel like a lot of people most likely interpreted that as bearish in a sense that like, oh, oil's going to rise, blah, blah, blah. And so I don't want to say that's like the spark, but I think that's a lot of an opportunity that sparked a lot of reaction in like energy as a whole. Definitely XLE, right? When you look at how it moved that day, at a spike, we found a higher low and just run following that, right? So that sparked the move. And then we see last week the big gap up off the Iran news, a higher low that was like really weird behavior internal in regular trading hours right here. And then we continue to run, right? Now, one thing I will say is the market's most likely never going to bottom or top on a Friday, right? Nobody wants to catch a falling knife. Nobody wants to stop a rally. into the weekend where uncertainty rises. So, with that being said, what we see here is a big time gap up this week, and we even saw a more aggressive move on crude in general, right? A push to 120. Well, I thought this was to 130. I don't know, but a big time move where a lot of these people, above $100 on oil are getting long. And first of all, it doesn't make sense. The opportunity was there, in the 50s and 60s. Like very, very cleanly there in terms of risk to reward. But they're getting long, and you see this euphoric moment in oil, and what happens is those buyers get trapped. Those late buyers get trapped, and it exacerbates the sell, right? That's why we see this big time fake out candle. It all happens like after hours, like late at night on Monday. So it's not really catchable on like options or equities. But that's why we see this like big time fake out, right? And that's why we see this big time gap that's faded on historic volume, even compared to the already historic volume we're having. Like absolutely crushes the June volume, crushes the COVID volume, right? Because it's kind of like, in terms of oil in general and like supply and demand, we have a rising of demand and almost like a decrease in supply to some extent on like oil. I guess I might sound like an idiot, but we just when you understand the behavior of investors and of people and how this news sparks this volatile movement and this volatile run in the oil vol index, which is specifically derived out of 30-day out crude options. This is not healthy behavior, right? So when the uncertainty rises and the demand rises, and then that supply is put in, those sellers show their hands, and then all of that demand kind of bails, all of those buyers kind of pull. Like, this is at COVID levels. It's going to be an aggressive move. And it's not healthy at all to kind of see crude oil vol rising and the price rising, spot up, vol up. That means we have a lot of options purchasing and uncertainty while the spot rises. And this can create this kind of whiplash, parabolic short effect in general, right? Because of the fact that we have a lot of people late buying options and buying positions on oil when the opportunity along it was lower and the informed party is now offloading this inventory. Now, what I will say is a lot of this is kind of most likely the administration saving the oil market, coming out with comments like the war is complete, use the Strait of Hormuz, whatever they're saying to kind of decrease that volatility in price of oil. Whether or not it's correct, whether or not it's accurate, it had a natural effect. As we see here, like a 15% decline in a couple of minutes. And so by doing that, you're kind of seeing the administration come in, save the energy or the oil price for a little bit. But what I will say is going forward, I do think this can rise. I do think that this can continue to push higher. I think the window that we approached and the sentiment and the euphoric aspect of this leading into March 9th allows for this parabolic short, allows for this opportunity for this to digest and reset leading into April, leading into March 20th and March 31st. That can offer an opportunity to relong this when we have SPX kind of enter that phase E, markdown phase, right? So that's kind of what I'm imagining here, right? I'm kind of imagining potential stagnant price action, maybe a little bit of a push down lower, kind of like develop like internal lower highs that are shortable pops, maybe just stagnant price action, maybe a semiconductor-led breakdown into a sign of weak or into a floor being established, and then we start to break down and get that markdown into April, kind of exactly around this time when it's in April, and we have those kind of flows unwinding, allowing the market to move freely. And we do have a very accumulative behavior developing here on cues, right, is what I will say. We have a very notable cumulative 4 lower lows being put in. So I wouldn't be surprised as well if we see a run-up on a couple of names. But this behavior is not very clean. I mean, I feel like if this were sitting here accumulating for this long, they would have gotten somewhere already. I think if anything, a path of least resistance is going to be put in through the 595 spot, and we'll see 589. But this is very accumulative, and it could definitely push that 620 spot. It all depends on kind of what runs us. Microsoft still looks decent, but that's kind of my outlook right now. Maybe I don't want to say I'm a oil supply and demand savant. I know a lot of what I'm talking about when it comes to oil. No, I just know how the equity and derivatives and volatility and timing and stock market, financial markets, and people work together to give you these opportunities that result in parabolic moves, that result in reversions in specific windows. Like, I don't want to be like that, but I called this April move to a T. I longed it on the 7th, shorted the 8th, longed it on the 9th. I just didn't play it clean going forward, and a little bit before, a little too early. But this is not, it's obvious. I don't know much about oil in general, but it's obvious what's happening, why it's happening, how it's happening, when it's happening. And I'm not surprised based on just SPY, the timing, USO, OVX, US oil, crude. And I think that these kind of digest, reset, and hang out for a little bit before another opportunity becomes available. So, that's pretty much it.